Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 7th of January. Starting off with the FTSE 100, which is within that rising trend channel from September to 23, but is still fading at that December resistance line, last month's resistance line there, now currently at 82.60. Below that, there's still the risk of further tests of the 50 and 200-day moving average area around 8200, and also the floor of the channel there at 8100, but hopefully this is a mid-move consolidation ahead of a move towards 8400. RSI on the right side of neutral 50, which gives us some confidence that we might be able to finally break that 8260 line there. Moving on to the DAX, and here we're trying to negotiate the aftermath of the bull trap top that we had, bull trap island reversal. We've managed to break back above the first gap down there that we had last month there at 20,200. Above that, looking for obviously a retest of the best levels, record levels towards 20,500 and ultimately as high as 21,000 by the end of this month, while we're above the 50-day moving average, 19,600. So looking better there. You can also see in the RSI window we've had double bounces, in fact triple bounces really for the RSI at neutral 50, so that is a decent leading indicator on the upside and hopefully enough to get the index up towards 21,000 in the near term. Moving on to the Dow, and here after a rather torrid December period for this market, still trying to regroup there at the floor of that rising trend channel, 42,500 above that initial resistance there, neckline resistance 43,400, and obviously then hoping that later this month we will get up to the top of that rising trend channel, up to as high as 45,600. On the downside, always a risk of a test of the 200-day line. That's at 48,800. We haven't been below that though since November 23, so that is quite a long time. So a very, very bullish market, and I suppose one has to give it the benefit of the doubt, even on rug pulls as we had back in August. Moving on to Bitcoin, where I think congratulations may be in order with the market back on the right side of 100,000. It's a W-shaped reversal based at 92,000 and looking obviously for a retest of that 108,000 record high, ultimately up to maybe as high as 120,000, the upper parallel of that April resistance line by the end of next month, while we're above the rising 50-day line at 9,700. Going on to gold, and here you can see that it's still a battle with the 50-day line there, 2680, and the floor of the rising trend channel, 2620, in a range between those two levels. If we can break out, then it would be 2750 post-November resistance. Worst case, obviously, a move down to the 200-day line and August support, 2500, although that looks increasingly unlikely given the way that we had a double bounce there at during December at the floor of that rising trend channel. Onto the stocks, and quite a motley collection today. The first one is a stock which didn't have a great time in the recent past, as you can see from the chart. Bit of a horror story there for Active Energy, but we've got this V-shaped rebound above the 200-day line and bouncing off the basically the top of that gap down that we had back in June at 0.18, above 0.18, looking for 0.3 again, which was the brief December peak for the shares, but clearly that's not for widows and orphans. That situation probably created a few on the fall for the stock. Moving on to Coral Products, which had a decent announcement today. I think it was a property deal, not quite in the Trump Tower type of league, but still done a decent amount for the share price today. It's also a bear trap island reversal, so one of our favorite technical setups, gapping down and then gapping up, sort of handbrake turn. Initial target here around 9 pence, maybe up to filling the gap, the September gap there, up to 11 pence. By the end of next month is a best case scenario target, while we're above recent support near 6 pence. 50-day line rising is helpful, although obviously so far today we've just we've fallen back a bit off the best level. So if you're cautious, you're probably waiting for an end of day close above December resistance to target the 10 pence plus level, that December resistance at 8 pence. Moving on to a stock which is in a rather more obvious recovery mode, broadening triangle base here for Falcon, and top of the triangle there at 7.1 pence, looking for that by the end of next month or even sooner, especially while we're above post-October resistance at 4.75 pence. So above 4.75, looking for 7 pence plus on FOG. Moving on from FOG to JOG, which is Jersey Oil, and here maybe a rather unlikely recovery, but very strong candles there to start 2025, opening at the low, closing at the high on 4 days, but basically 4 sessions. That suggests we should at least be able to get up to the top of the triangle there from October at 70 pence. Best case by the end of next month up to 91 pence, although I suppose at this stage rather difficult to work out what might do that. But we have had a bear trap rebound from below October support there at 48 pence, and the longer we stay above that, the better this chart looks. The other point to note is that the 50-day line is now rising, and that is a positive momentum booster along with the bullish divergence in the RSI window with a lower late December price low. Moving on to a stock which I don't really cover because it's rather bigger in the market cap stakes than most of the small caps that we look at, but we've got JD Sports coming up, and here just maybe a little trade for some people who maybe fed up with the small cap area. Broadening triangle base, top of the triangle there at £1.10, and looking for that while we are above resistance on the way down, basically around the 97 pence area. Probably looking for rather more than that. I mean, ideally we would get up to 112 pence, which is the top of the November gap, even if we then fail again after that. But that is JD Sports at the moment. On to Invinity, which against all the odds seems to be recovering. We're now back above the 200-day line for the first time since 2023, October 2023. That's at 18.25 pence. Our initial target here was 21. We can now look towards as high as 28 pence by the end of next month, which is the upper parallel of that rising trend channel base. We already had a double bounce for the RSI neutral 50 and a gap higher above the rising 50-day line. So this still looks, with all those very strong candles, looks as though there could be rather more gas in the tank there for a move into the upper 20s. Covered Novacyt the other day, and here it looks as though, well, we've already hit the target we were looking at. We were looking at the top of that triangle there, and that was the high of the day, 68.5 pence. Come back a bit off that, but the next level up would be up to 80 pence, which was the September resistance on the way down, and hopefully we can get that by the end of next month or even sooner. The resistance line there, I suppose, is the upper parallel of what we've got there at the moment, up at the top of that triangle, up towards 80 pence. So let's see if Novacyt can step up to the plate. Ideally, we stay above recent resistance, recent broken resistance at 60. It's above 60, looking for 80 on that situation. Decent move today in RC365, and here you can see that the shares have made good progress after the brief bear trap to new lows below November support at 1.25 pence. Nice move today, opening at the low and so far at the high of the day. That means we're looking for 2 pence by the end of, I suppose, this month, while we remain above the 50-day line at 1.35 pence. But obviously a very volatile situation. On to Revolution Beauty, and here you can see that we're not far off our target there. We had an unfilled gap to the upside, which is one of our favourite setups. 25 pence, the top of that broadening triangle, and looking for that at least while we're above the 200-day line at 21 pence. Best case here, I suppose, is that we fill the gap up to 33 pence from back in April, but maybe at this stage that could be a little bit optimistic. But there we are. We have a potential line there to shoot for if we can get through 25 pence relatively quickly, with the key here staying above that 200-day moving average. On to a stock which I don't normally look at, but here we are with Solid State, another rising trend channel based situation, and here encouraging in the sense that we're already touching the 50-day line. We've got those strong candles again. Bit of buying for 2025 there, another one of those situations. £1.75 the target there, while if we can get an end of day close above the 50-day line, £1.58. Best case maybe by the end of next month or the month after, up to £2.30, which is the upper parallel of that rising trend channel base. Ideally, we stay above the £1.44 pence level, which was resistance on the way down. Moving on to CIMEC, which seems to be starting to revive itself. Broken that line of resistance there from the summer. That was at around 1.95, above that we're looking for up to 3.4 pence by the end of next month, on the basis of the RSI rebound at 50, neutral 50, and the way that the 50-day line now rising well and the shares finding support above that. So today's move actually being backed by the rising 50-day line scenario. Moving on to a stock, one of the best rises of the recent past, and unlike some others, where rather than trying to knock the shares, we've been actually calling the shares up from below 0.5 pence and trying to see how high they can go so that people might make some money, which is obviously a nice thing to happen. Our best case scenario target there was at 3.4 pence, which has been finally exceeded today, and we're left grappling for what might be the next target, and at this stage probably looking for the line I've just drawn there up towards the 4.5 pence area, maybe as a best case scenario target by the end of this month. But the key here, staying above the previous target there, above 3.4, so above 3.4, looking for 4.5 by the end of January. On to the last two. The first one is Verici, and here you can see that we've broken out of that falling wedge. That was around the 4.25 pence level, above that initial target here, up to the gap there at 6.5 pence, best case up to 9 pence by the end of next month, although again it's probably difficult to work out what might do that. But again, looking at those candles, very, very strong over the near term. Given how rubbish the London market is, that kind of buying doesn't happen by accident. Finishing off with Zanaga, where we're almost at the calling it up from the lows, I think around 4.5 pence to 5 pence, break of that falling wedge, and obviously the shares have doubled since then. And as I said, unlike others, trying to look on the bright side rather than the negative side. Best case scenario target here now up to 12.7 pence, while we're above 10 pence. You can see the shares also going to a golden cross. The 50 and 200 day lines also are both rising at the moment, and we should expect a golden cross within the next couple of weeks. And the run up to that tends to be the strongest part of the cycle, which it has already been. Already up near that old 2023 peak at 11.6 pence, but looking up to 13 on Zanaga. That's it for me today. More updates tomorrow.